And equity markets across the Asian Pacific region pared early gains on Thursday morning after disappointing economic data out of China as investors awaited a rate decision from the Bank of England. China's business activity slowed further last month, falling short of expectations, which will likely set off a fresh discussion on the declaration or deceleration of the country's economy after a strong first half. Japan's Nikkei stock average and the Shanghai Composite Index both pared gains after the release. In Australia, the S&P ASX 200 was off 0.2%. Elsewhere, Hong Kong Hang Seng Index was off 0.4% and Korea's Kospi was essentially unchanged. Away from the markets now, the body responsible for polytechnics and universities examination in Nigeria, known as the Joint Matriculation Examinations Board, has remitted 5 billion naira to the Federation account of the Nigerian government. The Minister of Finance, Mrs. Kemi Adeosun, who made the announcement at the weekly cabinet meeting on Wednesday, explains that this is the highest remittance from the body in 40 years. The cabinet also discussed the latest second quarter GDP report released by the National Bureau of Statistics.
The meeting started at about 11 a.m., lasting about 4 hours. Among the federal ministers at the meeting was Aisha Al-Hassan of the Ministry of Women Affairs and Social Development, whose comments regarding the 2019 elections set tongue wagging across the country. The council, however, focused on the recent report released by the National Bureau of Statistics, suggesting the country has climbed out of recession. With the GDP growing in the positive direction for the first time in 5 quarters, government says a lot more needs to be done.
We realize that the growth is very, very small. It's not a growth that has impact. It is just shows us that we're in the right direction, but the growth is yet to have the kind of impact which we would like. And because we have a population growing at 3%, anything less than 3% is not likely to be impactful.
On its drive to show up revenue, the council is happy with the Joint Admission and Matriculation Board, which it says has remitted money said to be the highest amount in 40 years.
So far they have done 5 billion. And the Minister of Education reported that they have an additional 3 billion that they're ready to remit, which will take this year's figure alone to 8 billion. Now, they have not increased their charges, they have not increased their fees. So the question that FEC and council members were asking is, where was all this money before? So the directive was given that we must call those who were the heads of those agencies and similar ones to account. And that's the direction that we've been given, and that's what we intend to do.
The meeting will prove for Nigeria to join the Africa Trade Insurance Agency, an A-rated regional body set to provide long-term risk guarantees.
In the meantime, Nigeria's Dangote Cement PLC has approached South Africa's PPC Limited about a takeover deal. This signals the possible start of a bidding war for South Africa's biggest cement maker after an earlier offer led by Canada's Fairfax Financial Holdings Limited. In a statement to the Nigerian Stock Exchange on Wednesday, Dangote Cement confirms that the Lagos-based cement company is interested in buying the entire share capital on PPC Limited. The approach by the company follows a joint offer from Toronto-based Fairfax and PPC's domestic rival Afrisam Group Pty Limited. Lafarge Holcim Limited, the world's biggest cement maker, is also monitoring PPC's situation. Dangote Cement is the largest company traded on the Nigerian Stock Exchange with a market capitalization of about $10 billion. And Saudi Arabia is preparing contingency plans for a possible delay to the initial public offering of its state-owned oil company by a few months into 2019. Saudi Aramco maintains that the IPO process is well underway and the company remains focused on ensuring that all IPO-related work is completed to the very highest standards on time. Although no time frame was given, a Saudi government source hints that the most likely schedule is the second half of next year. The share sale is the cornerstone of Vision 2030, a much wider plan conceived by Crown Prince Mohammed bin Salman to reshape the Saudi economy and diminish its dependence on oil. Saudi Aramco has hired JP Morgan Chase & Co., Morgan Stanley, HSBC Bank, Moelis & Co. and Evercore Partners to advise on the IPO. South Africa's current account deficit widened to 2.4% of GDP in the second quarter of 2017 as an increased trade surplus was offset by a larger shortfall on services, income and current transfer payments. The Reserve Bank explains that the rise in the value of exported gold and merchandise goods helped widen the trade surplus to $4.95 billion from 57 billion rand in the first quarter. The services, income and current transfer account deficit widened to 3.8% from 3.3%. Transfers rose on a 42% year-on-year increase to 14 billion rand on the amount South Africa paid to its trading partners in the Southern African Customs Union. The net income deficit widened as both dividend payments to non-resident investors and dividend receipts from abroad fell. Meanwhile, South African Airways has announced that its plan to fly 23% fewer flights by the end of 2017 will not include cutting local routes. The loss-making airline, which depends on government debt guarantees of about 20 billion rand or $1.5 billion, would look at trimming overseas flights as well as routes to East and Central Africa. The national carrier announced the retirement of 5 aircraft on Wednesday as part of a revamp aimed at returning to profit. SAA, which flies one of Africa's largest fleets, received state funds in July to help it repay debts. South Africa's treasury is considering a 13 billion rand bailout to keep SAA going, as bankruptcy could hurt an economy already reduced to junk status by ratings agencies Fitch and S&P Global Ratings. And staying in South Africa, but this time with company earnings, as Aspen Pharmacare reports a 46% rise in full-year profits, boosted by a surge in revenue from an anesthetics portfolio acquired from AstraZeneca and GlaxoSmithKline. The drug maker posted headline earnings per share of 1,299.5 cents for the year to end June, up from 889 cents a year earlier. Headline earnings per share strips out certain one-off items and is the main profit measure in South Africa. Profits were also supported by firmer sales in Aspen's home market during the second half of the year. When Business Incorporated returns in a moment, a look at the global commodities market. Please stay with us.